trading changed for me when I learned this. It's all random. There is no perfect indicator or perfect combination of indicators that will tell you the best time to buy or sell. And that's okay. You don't need the perfect entry. You only need two components in any strategy to make it successful: risk management and trend, in that order. Your actual entry does not matter. And I know that you're thinking to yourself that this is one of the dumbest takes you've ever heard. Of course your entry matters. But I promise you that I will prove it to you with evidence that your entry does not matter, and I will show you why that's actually a good thing. In fact, if you watch this video until the end and I still haven't convinced you that the only thing that matters is proper risk management and trend, then I want you to dislike this video. I am that confident I will change your mind. Now, what exactly do I mean when I say risk management and trend are the only things that matter? I mean that literally, if I just picked a random bar to go long or short on with no entry condition except for some indication of trend, and I applied proper risk management, I can create a successful strategy that could outperform buying and holding. And later in this video, I will do exactly that. But before I do, here's the logic. Your entry doesn't matter because the market is random on a tick by tick level. Each tick, each buy and sell is its own separate event. Random, unpredictable, independent events. But these random events can form patterns because they're driven by human psychology. It's all humans buying and selling, institutions full of humans deciding to buy or sell. Even the fastest automated trading algorithms that these big institutions use are built on past human behavior. People naturally prefer going with momentum, not against it. Markets behave the same way. In an uptrend, price is more likely to keep drifting upwards because the path of least resistance is up. So if you take a long trade in an uptrend and you pair it with a solid risk-reward ratio, cut your losses quickly and let your winners actually run, then you suddenly don't need a perfect entry. In theory, you could enter on a completely random candle, and as long as it lines up with the trend and you manage risk correctly, it can still be a profitable strategy. And I am going to literally do that and prove it to you right now. First, let's go to tradingview.com and go to NASDAQ futures on the 5-minute time frame. I coded a simple indicator here that will enter on every 20th bar. As you can see on the chart, this green arrow just flashes every 20 bars. These will be our entries. So the entry is essentially completely random. Now let's add the strategy builder to our chart. We're going to use the strategy builder to plug in entry and exit conditions and get instant backtests, and it'll let us set alerts and even possibly automate our strategies if we find a strategy we like. You can try it free with the first link in the description. So first, let's go to properties and do 20,000 initial capital and order size is 1 quantity. Then let's go to inputs and make sure position side is set to longs, and we'll click this drop down and select random entries is greater than 0. And click entry. This is because in TradingView, any indicator that plots a shape like this random entries indicator will return a 1 when the shape is plotted and a 0 when it isn't. This is also true for any buy/sell indicator in case you want to try plugging one of those into the strategy builder. Now for our trend component, we'll only enter trades when the 5-minute 21 EMA is greater than the 5-minute 55 EMA, and the 15-minute 21 EMA is greater than the 15-minute 55 EMA. So to do that on the strategy builder, we'll scroll down to MA trend for higher time frame, make sure MA2 is set to the 21 EMA and MA3 is set to the 55 EMA. Then do MA2 is greater than MA3 on the 5-minute and MA2 is greater than MA3 on the 15-minute and click entry for both. Those are our only entry conditions. Now let's set up the risk management. Our risk management will be that we'll exit on a closure below the lowest point in the last 5 bars, and we'll set a fixed take profit and max stop loss percentage. So to do that on the strategy builder, we'll go to support/resistance bars look back and set that to 5. Since we're long, this means the support will be the lowest low in the past 5 bars, and then we'll check this box under it, which will exit the trade once we get a closure below that level. Then we'll come down here and set take profit to 0.5% and max stop loss to 0.3%. Now the strategy builder is going to give us an instant back test, but before it does, I want to remind you, we are literally entering completely randomly. Our only filter for entries is that some moving averages have to be above each other, and we're using proper risk management. Can a strategy like this even be profitable? How much do you think a strategy like this could have even returned over the past year? Well, I'm about to reveal it to you, but if it's more than you thought, then you gotta promise to leave a like and subscribe. All right, here we go. 3, 2, 1, boom. 549% gain in the past year with a pretty smooth equity curve. This strategy actually outperformed just buying and holding the NASDAQ over the past year. Pretty impressive for a strategy with literally random entries. Now, why does this strategy work so well? Well, if you look closely, you'll see that the win rate is only 26%, and this is because our risk management is set up so that we exit fast with small losses if the trade goes against us, but hold on for the bigger gains. If we go into the trades analysis, you'll see the average winning trade is 0.53% and the average losing trade is 0.15%. 5%, which is a 3.6 risk-reward ratio, which is why the strategy is so profitable. So now let's go through some live examples of this strategy. And by the way, you don't need the strategy builder to trade any of my strategies. It does make it a lot easier, but you don't need it. To enter a strategy like this without the strategy builder, you would just need this random entries indicator, and you would need my free higher time frame trend indicator, which you can get by going to our Discord 100% for free forever, no strings attached. And since this strategy only enters when the 5-minute and 15/21 EMAs are greater than their respective 55 EMAs, then you would go over here, set MA2 to 21 EMA, set MA3 to 55 EMA, and do MA2 is greater than MA3 for the 5-minute and the 15-minute time frames, and check the box next to them for both. And now when you look on the chart will flash this light teal kind of color whenever all these conditions are true. So for a strategy like this, where our only entries are those higher time frame filters and an entry based on the random entries indicator, then that would mean that we would enter whenever there's a green arrow and the background is this light teal color. So for example, here there's the random entries indicator, but the background is not flashed this light teal color. Here, same thing, and it doesn't get us an entry until right here. And this is the strategy builder taking this entry. It shows this white line, which is the entry price, this dotted red line, which means if price closes below there, that's an exit. This red solid line, which is a fixed stop loss, this green solid line, which is a fixed take profit. And as you can see, we take this entry and then price hits our take profit before hitting our risk management. And then if we go to the next example, we can see right here, we have another entry and price closes just below our dashed line right here and takes us out right here. Very small loss compared to this big gain. And then we have another entry right here. And as you can see, price goes to our take profit over here before hitting any of our risk management. And you can tell which bars are winners by the color of the exit bar. As you can see, this one was a win, so it's a green bar, and then this was a loss, so it's a red bar. Now I know what some of you are thinking. The Nasdaq was basically straight up for most of this year. Of course, a long strategy with random entries is going to work in hindsight because the chart just kept making new highs. Which, first of all, you're basically proving my point that only trend matters with risk management, and we did outperform buying and holding, but okay. I will do the same thing with a short strategy using the same entries during the same time period. I will just change the trend filters from upside trends to downside trends. If I'm able to do this successfully, I don't know what argument you can make that trend and risk management are not the only things that matter for a successful strategy. So let's do it. Let's put on the strategy builder again. Let's do the same properties, but let's set position size to shorts. Then let's once again do random entries greater than 0 and click entry. Then for the trend filter, let's do the same 5-minute 21 EMA is less than the 5-minute 55 EMA, but this time we'll add on to that. There has to be a downtrend on stochastics on the 45-minute time frame. So to do that on the strategy builder, we'll go down to stochastic trend for higher time frame, keep the default settings and select downtrend on the 45-minute time frame and click entry. Then go down to MA trend for higher time frame, select MA2 is less than MA3 on the 5-minute and click entry. Now for our risk management, we're going to do the same thing as the long strategy, but with small tweaks. We'll exit on a closure above the highest point in the last 4 bars, and we'll once again use a fixed take profit and stop loss. So let's change the support resistance bars look back to 4 and check the box under it, and we'll set take profit to 0.5% and max stop loss to 0.2%. Now before I show the results, sorry for blue balling you again, let me remind you what we just did. We are now entering shorts on random bars with some short-term trend filters and proper risk management on a chart that has been basically straight up for the past year. Let's see if it worked. Here are the results in 3, 2, 1, boom. 422% gain in the past year with a nice equity curve with a short strategy taking random entries on an uptrending asset. All we did was use short-term trend filters and proper risk management. So there you go. Now earlier in this video, I said it'll actually be a good thing when you find out your entries don't matter. And that's because you can see how easy it is now to make a successful strategy without even having an entry plan. You don't need to worry about getting in at the perfect entry every time or having the perfect 100% win rate strategy, as long as you apply trend filters and proper risk management. Now I wouldn't necessarily recommend trading a strategy like this. I kind of just made this to prove a point. But we do have plenty of real strategies with the exact settings and results in our free Discord. I'll put the link in the description. And if you want to create your own strategies like these and get instant backtest, instant alerts, and even automate them, try out the strategy builder free by going to thestratbuilder.com or clicking the first link in the description. And if you want to see a strategy that actually uses an entry condition with trend and risk management, you can check out my engulfing candle strategy by clicking the video on screen right now.